So far this month, I've made just over 60,000 and I'm not even doing anything new. This money came from a setup I've used hundreds of times before. It's not special, it's not talked about in mainstream retail circles, but it's one that when it shows up, I go all in on conviction because it works. And I'll show you what it looks like in just a second. The setup is built around three core things: liquidity engineering, the market setting witch traps, smart money reversals, ICT style displacement moves, and a clean entry model with precise structure shifts and fair value gaps. When I see those three things line up, I know I've got a good trade that can run hard and size up accordingly. Let me give you the real details here. I'm not trading 15 different setups. I'm not jumping around trying to scalp randomness. I'm watching the market build a trap, then flipping sides with precision. It's the kind of discipline that took me from breaking even to profitable to now making over $150,000 a month consistently as a full-time trader. In this video, you'll see the exact setup that's been printing this month, full breakdown of multiple 10k trades, and how I manage these positions to extract the max. If you're still trading based on hope or hype, this will feel like a complete mindset shift. And if you're already familiar with ICT concepts, this will show you how to actually apply them in a way that's simple, clear, and effective. Let's break down the cash printer in full detail. So this is really easy and it's really simple, and I'm gonna do this very quickly for you guys. So before we're trading times, we don't do absolutely anything, but here's the fun part. So with this strategy, we can actually take more than one trade. So let's say boom, boom, boom. Let's say we had a buy. Okay, and for buys, you want to follow the 3-step model like I taught you guys. So you want to ensure that, we have a liquidity sweep, we have some sort of market structure shift with displacement, and then we have a rejection of the low, which is most likely going to show signs after. But let's say we do have an entry point now, and our entry point will be an imbalance only, not an order block, but an imbalance, and that's a 1 minute imbalance. And let's say price actually pulls back into it, boom, 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 as you can see right there, and then it starts to distribute extremely nicely. And once it starts distributing, as you can see right here, we can actually get a scalp trade. So we can get a counter trade. So let's say when price starts to then distribute towards the downside like this, we can look for the same imbalance to enter off, as you can see right here, boom. And what we'll do, we'll put our stop loss here, just above the high, and target a nice 1-to-2 risk to reward ratio. As you can see here, for the exact same thing, we put our stop loss just below the low and target 1-to-2 R. And again, if you want us to pass and get you a payout guaranteed and you don't pay a single penny until payout, click the first link in the description and find out how we've helped hundreds of traders done the exact same thing. So we'll pass your challenge, we'll help you get funded, we'll get you a payout, and you don't pay us a single penny until you do get that payout. So click the first link in the description. But let's get straight into this video. So we come to the 1 minute time frame and we don't do absolutely anything. If the market wants to go up, it can go up. If it wants to go down, it can actually go down. But here's where the fun part starts. So as you can see right here, we do have a massive liquidity sweep. There you go. We just mark that out as a liquidity sweep. Secondly, you can see we have the rejecting of the low right here. Boom. So we do have the rejecting of the low. And as you can see, what we have here as well is we have a market structure shift of the high. And that's what we need to see. So as you can see right here, we have a 1 minute imbalance, which we can actually enter from. So all we will need to do is wait for price to then retrace into this 1 minute imbalance so we can actually get our entry point. You can see right here, put our stop loss just below the low, enough to target a 5 pip stop loss. And what we could do is target a 1-to-2 R. And as you can see, this 1-to-2 point is in line with liquidity, so it should be a high probability point. But let's see what price does actually end up doing. So as you can see, it does end up retracing, and then it does end up hitting take profit. It went slightly higher than 1 to 2, but that's completely fine. And as you can see here, here's where you would actually get your second trade. So this is the scalp trade I was actually telling you guys about. So with the scalp trade, it's basically the same thing. What we could identify right over here is that we had a liquidity sweep on the high, we broke structure of the low, and we also had the rejection of the high, because you can see we tried to get above the high right here. And what that actually left behind was there's a nice imbalance in the market. So what can we actually do with that? Well, we could enter from this imbalance. So if we put our stop loss at least 5 pips, maybe 6 pips in this case, just to be near these highs, and we can target a 1 to 2 risk to reward, and we just let price do its thing. You can see it does retrace and it does end up hitting take profit. So that would have been an easy 24 pips back to back in the same day and in the same session. Now if you guys did enjoy this video, don't forget to like, comment, subscribe, and I'll see you guys in the next one.